No, it's a great question, and actually, we can see in the answers of the survey because investors have actually they moderated, they pared down their bullish expectations on EMFX they had earlier in the year. It was about carry trade in EM in the first half, which has been, which was pared back by investors, and that's because of the strong dollar, return of the strong dollar, but also. In June, their biggest risk perception as a downside risk to EM was actually the US Fed and global central banks keeping rates higher for longer. And they were right. This is exactly what happened. Global rates sort of drifting higher, strong dollar, etc. But this time, interestingly, they shifted their top concern to a recession in major economies. They're not expecting this imminently. And actually, the probability has also come down a little bit. But this is now the top concern rather than global rates. That has come down to the second level. I think now there's a bit of shift in risk perception.
Murat, I wonder whether the estimates around a strong rebound in China could be overly optimistic at this point in the research, given that what we've seen, a slight improvement from some of the downbeat news even earlier this week on industrial profits, still falling, better than what we've had, but still falling. So isn't it a little bit too optimistic to think that there's going to be a turnaround the next 3 months? We ask investors not only downside risk to the EM outlook, but also upside risk to the EM outlook. And it's interesting, actually, in this survey, a rebound in China, strong rebound lifting up EM, has come back into prominence to the top level. 41% of the investors say this could be the upside risk. This could be positive for EM. It was 21% in June. So it's a big change. What's the reason? Well, our interpretation is there has been a series of stimulus measures over the summer and even earlier. And there appears to be some stabilization in data, as you mentioned, but also in August data, retail sales, industrial production, they were better than expected. And obviously, inflation has moved into positive territory. So they are coming in a bit better than expected. There has been a downbeat sentiment for a very long time. And also, as we're moving into autumn, we might see some important policy meetings, maybe more measures coming from there. It is possible. I think this is how we interpret this. This is how people and investors are probably seeing maybe that's the opportunity now going forward, given that the sentiment was quite downbeat for a long time. What's definitive in the report is the interest in the LATAM debt story, one of the preferred debt areas. Just walk us through the nuances here. What looks good in the region? What are the risks to be mindful of?
Absolutely. So LATAM has been a favorite region for quite some time. It was the most favorite region in June survey. It still is. I think there are a few things, obviously, one of which is the political cycle is mostly over. And, you can focus more sort of on the macro issues. When it comes to macro, growth is not that bad. Brazil growth forecasts have been revised up. Mexico benefits a lot from a robust U.S. economy. And also these two major markets, they really offer significant carry, both in real and nominal terms. Inflation has been brought broadly under control, closer to the targets. And investors are still attracted to carry. Look, obviously it's not a sort of a straight line, linear path. Every now and then you get volatility. But investors still are attracted to, fairly high yield that is on offer in these markets. And even though Brazil has started cutting interest rates, and they will probably continue to cut further, the real interest rate premium is still significant and very high compared to other emerging markets. And Mexico, as we heard yesterday in the MPC meeting, they're still broadly hawkish. So I think the growth story is okay. Interest rates are really attractive, and the political cycle mostly over is probably attracting people to Latin America still.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.